Hey, what's up with you guys? This is Irfan here from smartincubator.com and welcome to another video. In today's video, I'm going to break down some trades that happened today during New York session. And by the way, today is Friday. The market just got closed, and I want to show you the trade that happened on GBPJPY and EURUSD, plus the results of Gold EA Incubator on this master $1,000 account. So far, as you can see the date right here in the corner, today is 24th. And the last trading day is also today, which we are up 73.5% in profit, almost 74% in profit. And we've been able to recover this drawdown from June 15th all the way to June 24th, which is from 54% to almost 74%. So 20% in almost 1.5 weeks. Which is absolutely crazy because we recently released some new preset files that helped us with our performance significantly. So without any further ado, let's get into this trade that happened on GBPJPY, and I want to break it down for you during New York session. I'm going to go to 8 in the morning and I'm going to remove everything. Something really interesting happened. So this is kind of tricky because if you pay close attention, you'll see that this zone, we have a high probability demand zone here, and by the way, I have a video for that. If you don't know what they are, if you don't know what the strategy is like, I highly recommend you to watch that video. That I'm gonna put the card above this video so you can watch it after watching this video, and then you can fully understand that strategy. So we have a high probability demand zone here because this is we have a high probability demand zone right here, and this is the first candle that got out of the zone, and the next candle after that never tapped into this zone. So that's why there's a gap between this candle and this zone right here. Okay, so this gap makes this zone a high probability demand zone, and this is the first candle, this is the second candle that actually gave us a confirmation to buy the market. So if you were watching the charts before 8 in the morning, you could have put your buy stop here, and then your stop loss here, and then your TP would have been right here. Let me show you that you can actually take a one-to-one trade exactly right here. So it could be a beautiful trade because meanwhile it's created another high probability supply zone right here. Can you see that? Because this is the first candle that got out of the zone, and the next candle after that never tapped into. So this tiny little bit of gap makes this zone a high probability supply zone. So you could have done that. You could have extended your TP all the way to here to take a 1 to 1.5 risk reward ratio, and it would have been a beautiful trade if you were about to trade. But it happened before 8 in the morning, and then after that, look what happened. It came down, respected this zone again, and gave us another confirmation similar to this one, and then you could have done the same thing. Because let's say that I do that, but I never do that, guys, because I always say that every high probability supply and demand zone are only one-time use. So when a candlestick reacts to that zone and then it makes the move, then it's expired. So you don't have to, you shouldn't consider that high probability supply demand zone anymore, because it's already done, the move is already made, and you just need to move forward to the next opportunity. So let's say that I put my buy stop here, my stop loss is going to be below the candle, and then my TP right here, exactly one-to-one trade, and see what happens. I can literally take another trade even more than one-to-one using this high probability demand zone, but as I said, it's expired, so we don't even consider that. I'm just saying that it happened again, but this was the main thing that we should have looked at when we wanted to enter our trade. So the next trade that happened was on EURUSD this morning at 8:30 in the morning. So literally 30 minutes after that, I'm going to do a replay again, and I'm on a 5-minute time frame. As you can see, the market is consolidating right now. We have a major support level right here, and then we have a support level right here. So as you can see, there's a bunch of liquidity sitting below this zone. There's a bunch of liquidity sitting below this zone, as well as this zone right here. See, these two zones have the major support levels, because there's a bunch of liquidity. There's so much money sitting around these areas because all the stop losses are put here from buyers. So this one is already grabbed because, as you can see, the price is already broken below this level. So I'm going to remove this one, and then the same as here, as you can see, there's a bunch of liquidity sitting around here as well. So it could be the next target, and also we have a high probability supply zone here. plus we have a high probability demand zone right here. So now we have two. So right now, because it's actually moving in the middle of these two important zones, supply and demand zones, I'm just going to wait for it. As you can see, it made the move towards upside way faster, so I'm not going to target this one anymore because this one is already touched, and I'm going to wait for a better confirmation to take a sell trade. So the way I'm going to do it is that I can see this massive bearish engulfing candle right after this bullish candle. That is the best confirmation that I can ever have to sell the market. If I take my sell trade here and put my stop loss here and my TP right here, see what happens. I get a stopped out, and that's the problem with putting your stop loss above the candles. You know, I gotta make a confession that most of the times I personally do that, and I'm more okay to get a stopped out rather than widening my TP, if that makes sense. Because if I put my stop loss right here, at the same time I need to extend my TP. I need to kind of widen my TP and get out of the market a little bit later. And since we have a high probability demand zone here, it probably comes down to this zone and kind of touch this level without hitting my TP and then bounce back. It happens because this is a high probability demand zone. I can't risk that position right here to put it exactly in the middle of this zone because it's a high probability demand zone. But let's say that, you know, I enter my trade here, I have my stop loss above the zone, and then I have my TP here. So let's see what happens. You know, as you can see, it could be a profitable trade, but it doesn't always happen since you are taking your TP in the middle of the zone and not like at the zone, because as I said, it could be something like this, that it literally touched the tip of it and then it drops. Let's say that this move didn't happen and then it just dropped and then keeps coming down. So you already put your TP here and then you never touch that. So that's the thing about it. You got to be cautious about this situation. But at the same time, I could have done something else. When I see this candle, which is the first candle that hit my zone, I can take action. I can put my stop, my seller stop below this candle, and then I can still put my stop loss below the candle and my TP right here. So this is what happens. So let's say that I put my short position here, I bring down my stop loss and then my TP right here. So sorry, my TP 1-to-1. If I want to take a 1-to-1 trade, it would be right here. I still get a stopped out, even if I want to do that. See, just a little bit left. And then I could have won the trade, but it's not profitable anymore. So that's what I'm saying, guys. If you can really put your stop loss here and then just kind of widen your TP a little bit more, it could be way better. Just try to expand your TP, and this is what could have happened. I could have even got out of the trade way before it tries to hit my high probability demand zone. So that's very, very important, and it's very important to take it into consideration just for your profitability. So that these are the two trades that happened this morning on Friday during New York session, guys. I hope that you enjoyed this video and got some value from it. If you still don't know how they work, how supply and demand zones work, guys, as I said, watch my other videos. I have tons of videos on my channel, and I only talk about these two zones: high probability supply zone and demand zone, or I would say high probability order blocks. So if you have any question regarding this strategy or the Gold EA Incubator itself, which is a gold trading robot, you can drop your comment below this video, or simply check smarteaincubator.com and our support team will get back to you as soon as possible. This is for people who want to automate their trading journey, and they can use this trading robot that only trades gold on 5-minute time frame during London session and also other sessions with different settings on a 5-minute time frame. So, and then it can give you 1% to 1.5% on a daily basis. So again, thanks for watching this video, and see you on the other side.